Hello and welcome back to the Note. Today it's all been about earnings, and on balance it's been largely positive, unless of course you're talking about energy earnings, which have been disastrous. Now we all know that energy earnings have been written down following the calamitous fall in the oil price last year, but apparently they haven't been written down enough. Royal Dutch Shell was the first global oil major to announce its results earlier today. They disappointed, its share price was down 4.5%, and that's in line with the pattern we've seen here in the US. What we're looking at here is earnings and earnings forecasts for the S&P 500 energy sector and the S&P 500 excluding energy sector. And as you can see, the forecasts are for continued horrific earnings performance from the energy sector right the way through this year. Meanwhile, looked at this way, forecasts and earnings performance for the rest of the market have actually been quite good. The surprise rate, the positive differential compared to expectation, is actually running rather better than usual at this point in the cycle. Now if we take a look at revenues, plainly not as healthy as profits, but again, outside of energy, where something like Armageddon is going on, you can see some basic respectable revenue growth continuing for corporate America. Now, I think there are two main points to make about this. First of all, if S&P earnings are holding up that well despite the headwind of the strong dollar, which automatically makes their international earnings worth that much less, that does suggest that there really is some kind of economic strength here in the US. Secondly, given that the stock market for the US is still down for the year, despite what are broadly quite positive results outside of energy, that does show us that the stock market entered this year priced for perfection. It's no surprise that anybody that does miss their expectations has fallen quite dramatically because they were, on balance, overvalued. And indeed, after the market, we saw a very sharp fall for Google after a slight earnings miss, balanced by a very strong gain for Amazon after a positive surprise. Overall, it's a topsy-turvy earnings season of the kind we're used to, but if you exclude energy, on balance, it is positive.